Welcome to Matters Financial and Geopolitical from a Frontier. Thank you kindly for stopping by. Sub-Saharan Africa, Zimbabwe's inflation rate rocketed to 176% in June. Nowhere else, aside from Venezuela, are prices rising so fast, according to the IMF. However, this new number excludes effects of the reintroduction of the Zim dollar, which may have slowed inflation. 21st of January, I was writing about Zimbabwe, and I said the point I'm seeking to make is that there is a correlation between high inflation and revolutionary conditions, and Zimbabwe is a classic example. And in January, I was calling it a tipping point moment. Zambia's President Edgar Lungu dismissed the country's finance minister, Margaret Mwanakatwe. Yesterday, Zambia's Eurobond, which had been pricing in a default, rose 2%, which is very tepid. Lots of people sort of said it was a massive bounce. 2% is, neither here nor there. The bonds have been trading at 70 cents in the dollar. And here you see a price chart of that rebound. It equates to a yield of 19.9% in dollar terms, which frankly, it equates to 19.9% in dollar terms, which frankly is still distressed territory. Angola's Kwanza plunged to a record low on the black market, hit 500 per dollar on the parallel market for the first time on Thursday. That's about 31% weaker than the official rate, which is also at a record low. The local currency is being driven down by a lack of foreign exchange, which contributes to fuel shortages in Africa's second largest oil producer. Bloomberg opinion, Africa isn't being recolonized. Colonialism involves domination through violence. The many small Chinese entrepreneurs moving to Africa to set up shop do not have the backing of a mighty state or an armada of warships. They are on their own, and as an author and development researcher, Irene Sun reports in her book, The Next Factory of the World, How Chinese Investment is Reshaping Africa, these independent capitalists often lose everything they have to fires, crime, or other local hazards. Sun's research shows that these Chinese entrepreneurs generally hire locals. Something like 95% of Chinese manufacturing companies in Africa hire local workers, and 54% hire managers locally, while 73% offer apprenticeships or professional training programs for locals. Skeptics may believe that Chinese factory owners' profits, which can run to more than 20%, represent exploitation. But because most Chinese entrepreneurs live in Africa near the factories they run, much of that profit gets spent locally and is thus pumped back into the local economy. Profits reaped by these expatriate Chinese entrepreneurs don't represent colonialist resource exploitation. Instead, they represent the win-win nature of industrialization. Just because Chinese factory owners are winning doesn't mean African workers are losing. African managers in Chinese factories will learn the tricks of the trade and then strike out on their own. But for now, foreign investment in African manufacturing looks similar to the early stages of industrialization in China itself. Under Deng Xiaoping and his successors, China threw open the doors to foreign capital, offering itself as a low-cost production platform for foreigners. That was only the first stage. However, as Chinese workers learned from the foreigners and eventually moved up the value chain. But then saying there is one type of Chinese involvement in Africa that does threaten to become something akin to colonialism: Chinese government infrastructure loans. Chinese government banks are lending African governments large amounts of money to build roads, bridges, ports, and so on, often secretly. Although some of that infrastructure will be beneficial for African countries, some projects will not recoup their costs. When that happens, small African countries will be left holding the bag, owing money to the mighty Chinese government. China will then hold substantial leverage over its African debtors. It's a very interesting article, and I spoke about this when I was reading Xi Jinping's speech at FOCAC last year. And I said then there's been a substantive linguistic recasting of China-Africa by the Supreme Leader. He used this phrase, the end of vanity, and that's just one example. South African all shares up 9.1% year to date, dollar rand 13.8823, Egyptian pound 16.5896, EGX 30 up 4.54% year to date, Nigerian all share down 9.83% year to date, Ghana Stock Exchange Composite Index down 7.78% year to date. Moody's, East African countries' infrastructure spending will support growth but weigh on fiscal strength. Focus on infrastructure spending will support economic expansion, but recurring fiscal deficits will constrain sovereign creditworthiness, aggravating already deteriorating debt metrics. East African governments' pro-growth fiscal policies will support economic expansion over the next 2 years. Recurring fiscal deficits will constrain their creditworthiness at a time when they have less capacity to absorb future balance sheet shocks. In the next 2 years, we expect that fiscal deficits will be below those necessary to stabilize debt in all East African countries except for Uganda, where the debt burden is expected to rise compared to declining or broadly stable debt burdens in the rest of the region. Vivendi's Canal Plus has acquired the African film studio ROK, marking the first international acquisition in Nigeria's film industry, popularly known as Nollywood. ROK announced the deal on Monday, owns a large library of films and animation series in Nigeria, and produces movies and TV series for distribution platforms. Nollywood is one of the world's biggest film production hubs, and Canal Plus, owned by Vivendi, aims to expand in Africa's stiff competition from streaming services such as Netflix and Amazon has caused the group to lose subscribers in France. With more Africans buying TVs and streaming services not widely accessible due to relatively high data costs, I think that prognosis is incorrect. I think data costs are collapsing. The continent is fertile ground for satellite pay TV companies to provide original content and generate customer loyalty. Under the deal, Canal Plus acquired ROK's production, content distribution, publishing channels from Iroko Limited, Africa's digital content distributor for Nigerian films. Rights to European and African soccer have long been a draw in Africa, and Canal Plus has invested heavily in locally produced content. Iroko incubated ROK in 2013 and has produced over 540 films and 25 original TV series in Africa. ROK reaches 15 million subscribers on satellite TV services on the continent. Simon German 600 tweeted, "Fertility rates of Africa." Have a look at that. And then have a look at these cities. They're all the fastest growing cities in the world, all going to be in Africa. The Ebola virus has reached the Congolese city of Goma, home to 2 million people and a transport hub for Central Africa, for the first time since an epidemic began in the DR Congo nearly a year ago. A man who had arrived in the regional center on Sunday had been quickly transported to an Ebola treatment center. Authorities tracked down all the passengers on the bus. The man had taken from Butembo, one of the towns hardest hit by the disease. Because of the speed with which the patient was identified and isolated, and the identification of all the other bus passengers coming from Butembo, the risk of it spreading in the rest of the city of Goma is small, the health ministry said. The virus has killed more than 1,600 people in the DRC and 2 others who returned home across the border to neighboring Uganda. About 700 people have recovered from infections. And as I said in 2014, Ebola is about its escape velocity. Viruses exhibit non-linear and exponential characteristics, and that's the overall worry. Kenya's single biggest external creditor is China, which accounts for about 23% of Kenya's external debt stock. But most of Kenya's foreign debt is still owed to multilateral donors and a few first world states, notably Japan, France and Germany. The Nairobi All Shares up 6.07% year to date. The NSE 20 is down 5.3% year to date. Thank you for stopping by.